Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking about UnitedHealth Group. So let's go ahead and begin in with the daily stock analysis. UnitedHealth Group is the largest insurance company in the country. Now, it always hasn't been that way. Health insurance has been evolving, and it's a constant topic of what's going on in Washington and what's going on Main Street in itself. There's a lot of talk from different political parties on what the future of healthcare is going to be. But today, we're going to talk about one of the premier insurance companies that's out there. Now, it's not just an insurance company, and you're going to find out that UnitedHealth Group does a whole lot more than just insurance. But before we begin into that today, I want to remind you that this show is brought to you by my own financial planning company, which is called Richards Financial Planning. And if you're frustrated with your income not growing and you're not growing your value of building up wealth towards your future, go on over to richardsfinancialplanning.com and you can learn a little bit more about that in a new program that I have that's called the Prosperous Planning Process. So let's go ahead and begin in looking at what's going on with UnitedHealthcare Group. Now, the interesting thing about UnitedHealthcare is they are such a huge company, and they have a lot more than just insurance. The company in itself is $333.16 billion. Now, what I want to do before I begin into all of this is I'm throwing up here on the screen for those of you who are viewing today. I'm telling you all the different aspects, all the facets of UnitedHealthcare. And I'm just going to run through those real quickly with you for those who are listening and not viewing. If you have UnitedHealthcare, you have the employer and individual side, UnitedHealthcare Medicare and Retirement, UnitedHealthcare Community and State, which actually does a lot of state plans, UnitedHealthcare Global, which if you're in the United States, you really didn't think that UnitedHealthcare did very much outside the United States, although they do. They have 8 million customers in Brazil, Chile, Colombia, and Peru. They have another aspect of the company, which is actually a second part of their platform called Optum. And Optum is a technology-enabled health service, and it's broken down into a couple of different aspects, a couple of different areas. Now, previously, I did a review of Teladoc, and I used UnitedHealthcare as a comparison. And I had one person that said, how can you compare a company like Teladoc to UnitedHealthcare? The way that you do that is you look at the business platform that UnitedHealthcare uses to compete with companies like Teladoc. And the company platform that they use is Optum. They have technology-enabled health services that actually compete with Teladoc. Now, yes, it was brought up to me that UnitedHealthcare actually does use Teladoc. Yes, it does. They use Teladoc, some of the different services, but they have their own competing service. And at $333 billion, it wouldn't surprise me if a behemoth company like UnitedHealthcare actually absorbs a company like Teladoc. But we'll just see how that goes on going toward the future. Furthermore, if you look at what else Optum does, they have Optum Health, which is actually, they have healthcare providers that are working through the system. They have offices just like your regular doctor office, except the doctors are working for Optum rather than working for themselves or working for a hospital network. They also have Optum Insight, which is technology and healthcare expertise that they will farm out to other companies. They have also a pharmacy management program called Optum RX. Now, the reason why I show you all of this is because when we talk about stocks, we talk about three different things. We talk about the stability, the earnings, and the competitiveness of those stocks. And I really feel like that the vast diversity that is inside of UnitedHealth Group, the diversity of business operations is what gives them a significant advantage going forward. And when we actually look at the moat of the company, that's one of the biggest advantages that they have. Now, you might be asking yourself, what is a moat? The moat is that barrier that stands between the company and their competitors. That's what a moat is. And with UnitedHealth Group, we see that diversification of their business is their biggest benefit. They are a health insurer, but they're also a pharmacy benefit manager, a service provider, and they provide analytics to outside. Okay, make sure that we get the right buttons going on here so things move forward. All right, as we go on now, and we're going to look a little bit more at the moat of the company, if I can get this to move forward. All righty. Pardon me, folks, as we move on. There we go. It didn't want to go. Anyhow, the other thing that we're talking about is the scale related to the company in itself. At $333 million, they're like the 600-pound gorilla. Where do they sit? Anywhere that they want to. They're going to have a significant input to anything that's going to be happening in the future with regulations also. I think that that's something that's very important to understand as we go forward in looking at all of this. Now, let's take a look a little bit more at what's going on with the earnings. Revenues of $65.1 billion in the last quarter. They're up about 8%, that is. Now, Optum, I've emphasized that part of the company a great deal. They grew significantly, and they're putting a lot of emphasis into that. That grew at 21%. When we look at the actual earnings per share, you're going to see that in the last quarter, those earnings were down about 10%. And that's really COVID related in a couple of different ways. The company uses it as a way to say that they're bending the rules a little bit. They're letting some customers slide. They're reducing their prices. They're giving leniency on payments to help people out. Now, that is true. And that also does dig into earnings. But one of the other things that is bringing down earnings is that some of the members, the patients, are just putting off healthcare. How many of you have gone into the doctor for a regularly scheduled exam and didn't even think anything about the coronavirus? I would say none of you. If you're going in for an exam, you probably, obviously, you've got to be masked up and everything that you're going in for, because the doctor's offices won't let you in otherwise. But the other thing is, there are a lot of doctors that are really behind in doing regular routine exams for patients because the patients are just going, I'm not going to chance it. I'm going to stay at home. So that's brought down earnings somewhat in itself. Now, when we look at what the guidance is going to be going forward with UnitedHealth Group, they're expecting revenues in the coming year of $257 million. Now, I want you to remember that guidance is not a guarantee. It's just what they are expecting to have go on. Now, when you look at what they're expecting to have happen with their earnings, they have a very good history of earnings. And when we talk in a moment about what the bulls and the bears, as far as analysts are saying, you're going to see that there are some analysts that say that this is actually a negative. And the fact is that UnitedHealth Group has had earnings per share grow in low teens for a long time. And it's a big question mark. Can that continue? What they're saying right now, the company's guidance is saying that they expect their earnings to continue to grow by 13 to 16% in the coming year. They expect their cash flow to be huge at $20 to $21 billion. Now, remember, again, I have to emphasize this. It's just like anything else that we talk about in investments. The guidance is not going to be a guarantee of what's going to happen. Now, when we look at actually what some of the analysts are saying, this is actually research that I did through Morningstar, and they're really bringing it down just a little bit. They're saying that they're expecting the earnings per share to really only grow around 6 to 9%. They don't think that UnitedHealth Group is going to be able to make it to the teens in itself. But remember, there again, these are opinions and they're not guarantees. When we look back historically at what's happened to earnings, for those of you who are listening, what I've got thrown up on the screen is a graph that goes from 2014 to the fourth quarter of 2020. And what you're seeing is there is a thick blue line, that's the actual earnings per share, and there's a dotted line, and that's the estimates. And you'll notice that this is rare for a company. A lot of times it bounces around a lot. You're going to see that every single quarter, just about every single quarter since 2014, they've hit their earnings estimates. And they even went over top of their earnings estimates at the height of the coronavirus pandemic. Now, yes, they earned less, but the analyst expectation is really what we're talking about at this point. One big benefit to this company and their regular earnings is that they do pay a dividend, and dividends, I love dividends. Dividends are awesome. UnitedHealth Group has a dividend of 1.47%, and it has increased pretty steadily in past years along with the value of the stock. So if you're buying into this company from the standpoint that you want growth, historically you do have good growth, but also historically you have a regular dividend that's being paid from the company, and it's being fueled by the consistent earnings of the company in itself. But remember, look, this is not a guarantee. This is not like a bank account. These things are not guaranteed. So things can change as you go forward. Let's look for a brief moment now at what some of the analysts are saying about this stock going into the future. The analysts that are bullish, they're picking up on what I've mentioned from the very beginning of today, and that is the size of this company and the fact that it is so diversified, that it has medical, pharmacy, and healthcare services. It's just not a one-stop shop for one thing. It's just not an insurance company. They have such diversified lines that it helps them all along the way. Another benefit is that as the American population grows older, a lot more are going to participate in the Medicare Advantage programs. And UnitedHealthcare is one of the top 3 providers of Medicare Advantage programs in the country. And then last but not least, UnitedHealthcare has been very conservative in how they operate their company. They have a very conservative balance sheet, and that works well to their benefit. You might remember just a few moments ago, I mentioned that they're projecting that their cash flow is going to be $20 to $21 billion. That's a very conservative estimate, and it's actually good. Now, when we look at what the negative aspects of this are, the bearish analysts are just coming out and they're saying this. I mentioned this in the beginning, and that is that the double-digit rates of return that you've been experiencing if you're a shareholder can't continue forever. And the pandemic in itself is going to continue to weigh on this. The longer that it goes, the more it's going to dig into profits. Now, the government impact on healthcare is a big unknown. There is a huge contingency of people that say that they would rather have government-operated healthcare. Now, I don't know if you're one of those or not. If you're a shareholder, obviously you're probably not. If you're thinking about buying this company as a shareholder, you're probably not thinking that you want to have universal healthcare, because it will dramatically change the way that this company works. And in the event that that changes towards the future, whether it would be the Affordable Care Act gets revamped, re-emphasized, built up more, insurance companies are going to continue to be an integral part of our healthcare system. It's huge. It just can't be replaced overnight. Well, let's hope it's not. Okay, and the last thing I mentioned is the growth of the double teens just can't continue on forever. Now, when we look at actually what the price per share is and we compare it to what the fair market value is, this is just a little bit different. The price that I'm throwing up here says 350.43, and I did this a little bit before the close of the market. The market value right now is at 347.56. But what Morningstar is saying that the fair market value of this is at $329 per share. So there are a little bit, the current value is a little bit over top of what the fair market value is. And if you look at it historically, for those of you that are just listening, what I'm showing you right now on the screen is a graph that goes back to 2010, and it shows the fair market value and the actual price of the stock over those periods in that time period. And what we're seeing is that on a regular basis, the closing value, the actual value per share, historically has been about half and half. Between 2010 and 2014, we saw the value below actually what the fair market value was. Then from 2014 all the way up to 2018, we saw the value go above what the fair market value was. Now we've turned the corner again just a little bit, and we're actually below what the fair market value is from 2019 until now. And we're just now going over top of what the fair market value is by about 6%. So most of the analysts out there are saying that this has a lot of potential to grow from that standpoint. What I'm showing you now is what the big group of analysts are saying. We looked at 18 analysts. And out of those 18 analysts, 14 of them are saying that this company is they're saying that this company's a buy. Now, you've only got one that's a holdout and saying that it's a moderate buy. You've got two more that are holding out more and saying that they're a hold. But the vast majority of analysts who are reviewing this company say that it is going to be a solid buy. Now, remember, when we look at the formula that I suggested all of you follow, the SEC, the stability, the earnings, and the competitiveness, we're now at the point that we're looking at the competitiveness. How does UnitedHealth Group compete with other companies that do similar things? Now, one of the unique things about United Health is that there's not any other company out there that's exactly like them. When you look at CVS, and if you look at the spaghetti graph that I have in front of you that has all the lines that are going all over the place, you're going to see the first company that I throw up there that's in red is CVS. And you'll see that United Healthcare has actually in the past year excelled beyond CVS significantly. But you have to look at it from the standpoint of what they do. CVS does have some competing business, but they don't have everything. They do have the ready clinics. They do have the pharmacy. They do have the storefronts, but they're not doing exactly the same thing. And we've actually seen United Health Group excel over top of CVS. Now, another company that does something similar, but not exactly, is going to be Humana. And actually, Humana has done better than United Health Group. Not a lot. They're moving more in tandem. It looks like they came out of the pandemic just a little bit better than United Health Group did. Then we look at Anthem, and we also look at a company called Centene. And what Centene does is they primarily do TRICARE programs for military and government programs. They're in there too. Okay. Now, let's actually go back and look at what's happened over the past year with United Health. A year ago, they've actually done really well. A year ago, they were at 275.06. Today, they closed at that 347.56 number. So over that year, over the past year, we've had a great return of 26.36%. Now, remember, I have to emphasize this, especially when we have such positive returns during a year, that the past performance is not going to be a guarantee of what's going to happen in the future. We try to get some indications of what might happen, but obviously it's not going to be a guarantee. Let's wind the clock back and get in the Wayback Machine and go back 5 years. Let's see historically what's gone on with the management of this company. 5 years ago, they were trading at 109.21. And when we look at the increase in value up to the 347.56 that we're seeing right now, that's a 218.25% growth. If you were to average that out on an annual percent rate, that would be 26.05%. And I have to emphasize on this that, yeah, the past performance is not going to be a guarantee of a future result. No, it's not a Tesla result, but this is really a good return for an investment on a company that's very steady growing, and has great potential going into the future. Now, let's take a look and see. To close things out, let's look and see what the actual analysts are saying about UnitedHealth. The most conservative projection out there is by Raymond James, and Raymond James is pegging in between 355 and 405. They have it as a strong buy. Remember, we're 355 to 405, and today we closed at 347. So based on the projection from Raymond James, they're looking that this company has some room to grow. If we look at the most aggressive analyst out there, that would be Piper Sandler. Piper Sandler is looking for a 385 to 409 price. That is pretty big. So what we want to see is how does this compare to where we are right now? And then you have to ask yourself, how does this fit into your scenario? Is this a stock that you think that you could benefit from? Do you feel good about the stability of the company? Go back and look at what we talked about. Do you feel that the earnings are going to be able to continue? How do you feel about its ability to compete within the area of what it does? When you add all that information up, I think that you'll come up with this company and decide that it's really a pretty good company. If you were looking for a stable stock for a number of years, I think that United Healthcare or United Health Group, to get that, they have such different close names in there of their organization. The United Health Group does have a lot of good potential going forward. But just like any stocks, there's no guarantees that it's going to continue on forever. There's no guarantees about what its future performance is going to be. So you have to decide, does this fit in with what I want to do with my investments? Okay, friends, thanks a lot for visiting with me today. Remember to continue to put your request in, because this is a stock that someone had requested that I do a review on. And if you have a stock that you'd like me to review, go ahead and enter it into the comments. I get most of my comments through YouTube. I know that we're also live streaming on Twitter and on Facebook, but there's a lot more interaction from you all, the people that like this show, over on YouTube. Go over and like it and subscribe, and you'll get more bonus information as I post it to YouTube. Thanks a lot. Stay tuned for today's disclosure. That's a really important part, and we'll talk to you tomorrow. Have a good evening.